Hello there, this is Misha again from Quick Start Forex with another live trade setup video. We're going to look at four currency pairs because all of them have something nice that I can explain in terms of setups. Okay, so the first one that I want to look at is here New Zealand dollar US dollar 6-hour chart. The custom time frames are a bit more advanced things, so don't get too hung up on it if you're only trading 4-hour and daily chart on your MetaTrader 4 platform. That is totally fine, and I recommend you stick with that until you're very comfortable with the setup. Otherwise, it is just too much to analyze and you just have too many things that, is this actually a setup, is this not really a setup, and so forth. But the price action remains the same, so I'm going to explain it using price action. Okay, so New Zealand dollar, US dollar, excuse me. Quickly, my support and resistance areas. This one I'm not too confident in, but I placed it in anyway because of these two large bounces around this area here. We see another body bounce there, then we broke through it, and then it's just quite messy. But what's nice is that the last bounce we got was fairly recent, and price simply cut through the support and resistance area, which is better than it kind of closing and opening around the area, if that makes any sense. It's better to see the support and resistance area just completely getting shredded, and even though that doesn't make really sense, that makes this area still very much valid, whereas this kind of confusing is not so nice to see. Anyway, so this is the area that we're looking at the moment, and the setup, as you can see here, occurred around 6 hours ago. So we have a very nice strong up move into the support and resistance area. We see nice indecision, and imagine you couldn't see this candle here. This would be a valid setup. If we looked at the news and there's no major things coming out like big announcements or interest rate figures getting released, this would be a valid setup, right? So the entry would have been here down at the bottom, the stop loss would have been here at the top, and our target would have been 1.5 times what we risk. But as you can see, this order was cancelled because the bulls did manage to make a new high. This tells me, it could still reverse, who knows, but this tells me that the bears are not quite there yet in pushing the price down again. So this setup is cancelled, and I would move to the next one. So here is another one that hasn't been triggered yet, but is close to being cancelled. So here we have again a support and resistance area. This is, by the way, US dollar Japanese yen. The problem is with this chart that the last time price has been in this area is quite a while ago. So that's February last year. That is quite a long time, but it was quite a strong support and resistance area. So this is still, and we can see here price did stall in this area again, and now we're again in this area. Again, not too great a setup, but still price action wise, I want to explain what's happening here. We see a nice strong bear move. We see solid indecision, showing us this long wick here shows us the bulls did push through the price all the way up again, and the bears didn't manage to close below the support and resistance area. Right, so this is a potential point for a reversal. I'm not going to take this setup here because it just doesn't look clean enough to me. You know, and that's a good thing to learn as well. You don't need to take every single setup if it does look a bit funky. So this is sort of a potential setup, but not a great one, so I'm going to skip it. Then Euro US dollar is something nice to explain again as well. This support and resistance area is way more obvious, so we have nice couple bounces here, price fell away, we get a reversal here again and again. Then here it's a bit choppy. We break through this area quite cleanly, which is just fine. On the way up it acts as resistance, and we get a lot of resistance here. price drops again. We see a massive spike up into this area and it drops off again. So this is definitely a valid area, and overall it does look like we have some bearish strength here in the market. But the problem with this setup is this high up here. So we have a nice strong bull move into support and resistance area. We see here indecision is slowly but surely forming, but it's still quite a long time until this candle closes. It's actually another 4 hours until this candle closes. But this high here bothers me. Why? So if we would want to enter this trade, our entry would be here at the bottom. But according to our very basic trading plan, our stop loss is just above the high of the indecision candle, right? But price action wise, this doesn't make sense because the bulls did manage to push the price all the way up here, which means we should actually set our stop loss up there. That would be a more reliable price action based stop loss. Right, so it's not a bad setup, but it just means our reward is quite far below if this should be 1.5 times of what we risk here. So I would consider trading this, but there's an even better trade setup occurring right now, and that is happening on the Australian dollar US dollar chart on the 6-hour chart, but also on the 4-hour chart. I'm going to look at the 4-hour in a second. So this support and resistance area is a bit more choppy than I would recommend a beginner set up his support and resistance areas. But you can see here we get some wick bounces there, a nice strong wick bounce here, a body bounce there, and then this is the problem area, right? It's just a bit choppy, but it's okay. Okay, if we scroll back, we see another brilliant wick bounce here from this area, which is very strong, super strong body bounce, very strong wick bounce. So as you can see, this area is quite strong. Okay, then to the actual setup itself, we see a very strong bull move into our area, and then we see this candle here, and this is our good old pin bar setup with a long upper wick, and it's not a great small body, but you can see that the bears did manage to push price down again after the bulls tried to push the price up. So they tried to push here very hard through this area of support and resistance. They didn't quite manage, and the bears just said, no, this is how far we go and not further. Does that make sense? So there is indecision. The bulls are not just dominating this market anymore. Our entry for this, I'm going to actually enter this trade here. My entry for this is 4 to 5 pips below the low of this indecision. My stop loss is above the high of this indecision candle, and my target is 1.5 times. So the only thing that I'm worried is that 1.5 times is below the support and resistance area, but I don't think so, because this is about half. We'd have to do a small calculation. So 1 would be around about here and half here. I know that's a horrible way of explaining it, but I could look at numbers as well. But for now, just illustration purposes, if my target would be below, then I would probably not take this trade, because we have support coming into our target. Does that make sense? Okay. But this is definitely enough space. So on the 4-hour chart, let me show similar scenario. We probably would have been entered here as well, almost stopped out, depending on if we went up first or then down. We could check on the 1 hour if we would have entered here already, but I'm gonna enter based on the 6-hour. So on the 4-hour, we would have probably already entered this market here, just a couple of pips below this indecision candle. Our stop loss is a couple of pips above the indecision candle, and our target is 1.5 times our risk. Okay, so let's actually look at this in terms of numbers. So the low of this candle here, low of this candle is at 0.7494, so I would enter at 0.7490. That is great. The high is at 0.7518 roundabout, so my stop loss would be at 0.752, sorry, no, just maths, 23 roundabouts. Okay, so 5 pips above the high of this candle. Let's quickly see if I can get some lines here just to illustrate it. So our entry would be at 0.7490. Okay, then it means we would have not entered this trade yet. And our stop loss is at 0.7523. Perfect. So that would be my stop loss and my target. How many pips is that? From here to there is 33 pips. So times 1.5. That's 15, 16 and a half. So 49.5. Around 50 pips. Okay, around about 50 pips. So from our entry, 50 pips downwards. 50 pips, bam shazam, 7440. Alright, 7440, 0.7440. That is my target. I'm just writing these down because I'm going to actually enter this trade on my live account as well. And that's how simple it actually is. But I hope you can see from this video that it is okay to not take every single opportunity that you see. Trade like a sniper, not the shotgun approach. Take the best setups that you see and only trade those. It's better to win a few trades and actually have a good win-loss rate than taking hundreds of trades and your win percentage is way lower. Trust me, you'll make more money with this kind of sniper approach. I hope this video helped. This is still live, so if you see this video, I'm going to upload it right now. Using your own analysis and your own risk, you can enter this trade as well. I'm going to enter it based on the 6 hour though, but as you can see, it is the same thing. Alright, all the best. Hope you have a good one.